So, good morning, friends. Today a little bit late, but don't mind about it. That's a choppy day, news trading day. So, we didn't miss anything. And as we can see here now on 1 minute chart NASDAQ, I begin first with data. The data mixed. The CPI number was flat around the expectations, but the other macros bearish for Nasdaq. But it seems Nasdaq is celebrating, as I told you also in the videos, in the last and previous videos, the bulls in Nasdaq celebrate each time, even if one positive or hyper positive news is releasing, or day traders. The macro is bearish for bullish for dollar. Dollar is taking profit somewhere because of the CPI. The number wasn't negative, it was 0.3 and as expected. Also yesterday we have seen after the bell we had earnings, and this week was the earnings week. So the whole week began with Google, it began with Meta, Nvidia, and the others. And yesterday, some smaller company, PayPal, and the others released their estimations. Only PayPal was positive, but it seems that Nasdaq is celebrating that. And like couple of days and weeks ago, we see always the same principle. The market makes slowly higher highs, then shortly before, after the bell, the earnings has been released, the market jumps higher and then makes a new lower low of the day. Right. So far, so good. What does that mean for us? Well, we stick to our plan. We're still bearish, very bearish now. Also today we have gained some good profits. So I have been selling much more, and now shortly before this video at around 14,320. So somewhere here I sold again. I'm still waiting for my big sell-off, big selling positions. What does that mean? That means that I will short the market with very huge positions, but those limits have not been reached. So as I told you, somewhere around here, so I have marked them just for myself. We see that the market is definitely below 200 EMA. And what does that mean for trend traders? You can guess. These EMAs have the function that they work as very strong support or resistances, and it has not only broken, but also you see after the break the market started to run towards this primarily important level, fell down. Next point is that we have filled the gap, and the gap was tested 5 times before in the past. So it had a second function, and the function of the gap was that it built a support area for the bulls, but now that support area has lost, and now it is a very strong resistance level. So, therefore, we use the pullbacks and also retracement to sell much more the market. We stick to our aim to go below the 14,000 area. The first target then will be at around 13,980. If I say the first target, it does not mean that I will take profit of that. The first target means that we can then elaborate if we will have a bigger retracement or the market will stock in a consolidation range sideways, or the market can easily that level. If breaking that, what I guess personally, and I tell you also why, because the volume at those areas is very, very low, then the market can drop back to around 13,200. At that level, for the first time, the bulls find a really strong level. And it will be a little bit difficult to break that level. It takes also a longer time period, perhaps. And if the fundamentals, the global and macro fundamentals, will not be changed until that period of time, then I doubt that the NASDAQ will reach the previous highs for a longer time. Instead, the market and the sentiment can become much more bearish and aggressive. All right. Then, somewhat to some people in the chat. So we are here traders, and some of us are trying to share the ideas and to help other traders who are new, because I got also not too much, but there are a few people who are offending other people, and I don't know why they are doing that. That's not, that's far away from any way of intelligent thinking. So I doubt about the smartness of that people, therefore I'm ignoring them. But to see that here, we know that we have also traders here who are new or who are interested to learn this business and everything about trading, and that's the way I appreciate that. Not only me, there are also other traders in TradingView who share the knowledge. They put the energy and effort in their live streamings, in their trading ideas to help to create here a trading community with very positive energy. So if somebody is going to disturb that, of course, I'm going to ignore that person immediately. And I don't doubt about it. I will report that person, because we are communicating, talking with each other in respect, and everybody deserves respect. So if next time I get such offending posts, I will immediately report it, and TradingView is reacting very fast, meaning you get blocked, right? So that was. Now for me today, meaning I have just yesterday I had a lot of trades. I had around 57 trades. I had 7 losers, 1 break even, but thanks to the trend, we had very good revenue yesterday. The Google has published also its earnings. It was some way positive but disappointing, and minutes later they announced that the revenue for 2024 will be negative. So today what we see here is just a news trading day, meaning people are trading just the news today. The macros are very negative. And now I want to go a little bit closer to that picture, make it a little bigger. I hope I find the right words to explain that in that manner that is understandable even for new traders. And we see here, for example, a very volatile market. The volatility, the volume is very high, I need to say. Even the data are disappointing. We see, for example, that if we take just this period, we see that we have very fast moves in both sides, not only bearish, but also the bullish side. We see, for example, here, also the market is not, or better here, before data came out, the market nearly did nothing. You see, we have higher highs, low lows again. Then consolidation, the market makes higher highs, break the structure, and makes again lower lows. Then short consolidation, higher highs, and then again lower lows. So, and now if we combine them, we see here we have then this structure. So we call that a megaphone, right? Because it's looking like a megaphone. And this pattern is called broadening pattern. And this pattern is typically in times you can detect such this pattern if the market is really unsure. If we have, for example, mixed data, right? For example, we see here the NASDAQ now at around 1% or more than 1% in plus. Then S&P the same, but Russell is playing short, right? Yesterday was exactly the opposite. Yesterday NASDAQ and S&P were all bearish, and then nearly at the end, Russell started to play bullish. Then yesterday, the dollar, the same. The dollar was bullish, today bearish, and instead, yesterday the bonds, the yields have been negative, and now they're coming to the positive territory. The euro is doing the same, but no, the GBP, yes, GBP was half an hour ago in bearish territory, so they're coming to, right? And now VIX is exactly the same. So we have no clear picture, and we have some mixed numbers in fundamentals, right? Yesterday we had, the whole week, the macro data have been very bearish, but the expectation how the markets or assets will respond to that was very mixed. And that makes an investor, a trader, very confused. So where can we detect this pattern again anymore in the past? If we take the whole day, we see here, so somewhere around here, I check, 26. Yeah, here was the opening price. We see exactly the same, right? The same pattern. Oops. And so very mixed pattern. And if we now try to trade this pattern alone based on day trading, right? For example, let's say there is a trader whose intention is to every day in the week to make a trade. Might it be short or might it be long? It doesn't matter, but he wants to take a trade, to open the trade, to execute it, then to set a profit target and to take the profit, and possibly if he sees that the market is running again and after his profit target he wants to gain more, right? Of course everybody wants to make more money, so that's the aim that we are trading. All right, in such days especially it would be very difficult for that person because we don't really know if based only on our trading strategy. The trading strategy in this kind is day trading, right? It would be very dangerous because we have very mixed signals. We have very confusing macros. Macros are macro global news that are released. For example, inflation is too high, or Fed is speaking, the interest rates will be hiked or cut. Or, for example, the GDP number is positive or negative, right? Macro numbers, the data. And on the other side, the minor important data, let's say the earnings about Google, the earnings about Microsoft, the earnings about Apple, right? So they are not released or they won't say because the companies sometimes they don't announce the real numbers, right? Because that's more in private sector. With private sector, I mean they try to protect their own company, right? That's the target. And of course, to make more money. An example is that, for example, let's say Tesla started and Nvidia started to buy back massively their stocks. But the news that have been released that Tesla is buying back its own stocks, and that is driving Tesla's stock price higher, have been published many hours later. The global data, the macros, we know exactly. We go, for example, like you can see here, right? You can put an alert here, for example, dollar props keep support, yen, Fed, JGB, Bank of Japan, divergence tested. All right. So you can put alert. You can immediately get the news as they are released. So in this kind, the source of the news is Reuters, right? The news you see here is not the exact news that are released like economical data. The economic data, you exactly know in 2 seconds the numbers what will be published, and you can very fast react to it, right? The other data of the companies, they are always time delayed. So sometimes your settings says, for example, now let's say we use here, for example, market structure, right? So let's say we take this one. We see, for example, from here to here, if we use a simple trend line, and during this time we have been short from here to here, right? You see here from here the market went down, then we had a pullback, retracement, and finally here the market broke that area, right? All right, now there are two types of traders. Some get in here a little bit earlier and they don't wait for confirmation. The market went Sunday very high, as I mentioned you in my video of yesterday, it was, I guess. So it happened around 4 seconds, the market up and down. After the bell, 4 o'clock, EST time, 4 p.m. The market closed, but NASDAQ jumped higher, earnings came out, and then started to struggle. And now there is another type of trader who is saying, okay, I'm waiting for the confirmation. Once reached back, right? Here we had the trigger signal, the market went up, and the first trader started to buy the market here. The second trader says, I am waiting until the market is going up and coming back, tests the trend line, and then I buy again. And somewhere here he started to buy the market. It went high, but not high enough, right? Because the market made a new higher high. What happened instead? You can see here, the market came down and made also a new lower low of the day. The market made a higher high. It broke the high of the previous day, but it fall back below that low of the previous day and made also a lower low. So, and then the market developed that here. So, and we see here this pattern nearly in every day during the last weeks. And the solution is, therefore, I avoid any kind of day trading, right? I ignore all the comments. No, your analysis is wrong. The market, are you that person? Yeah, I show you. So I'm not lying, right? For example, this guy here, if I find him. And I'm not answering those questions because it's wasting my time and energy. Instead, I put my energy in progressive and productive things. Yeah, this King Hassan, or I know. So you're the same guy who said NASDAQ is about to break and now the market went up 150 points. That's exactly right. The market went up 150 points here and also 150 points here. But I'm the same guy who told you also at 15,900, sell, sell, sell. We will go below 15,000. We will go below 14,500. We will even go below 14,000 and so on. I'm the same guy, right? Who told you the market will go down 5,000, 5,500 pips. So I don't mind about it, right? But there are a lot of people who are confusing. And what I'm trying to say or to mention is, need in general a trading system that is protecting us of any kind of confusion. I am not a big friend of day trading. Why? Because over the longer period of time, your win-loss ratio is below 50%, right? There are a lot of companies who have been calculating it since 1950s, I think. And they have, for example, made different strategies of day trading systems, buying the support, selling at resistance at an open price, or entering at opening price, then selling at high, and so on. And over many years, the ratio of winners to losers are absolutely terrible, right? The market makes 5,000, 6,000, 7,000 points in general, but the win to loss ratio of day trading is below 0.5, and that means that sooner or later your account will suffer. And we are not talking about the losses we take. We just say, okay, if also the losses are around 0.5% of 1% of the account, how long can your account accept it, right? So therefore, we need a very robust and simple trading system that we can use, and therefore I am almost for a trend trading system. Trend trading system is not something you can use also on bigger time frames. Trend trading we can very well practice also on daily basis, but on lower time frame. We see here on 5-minute charts, for example, that the concept of the trend trading, right? If we compare that now to bigger time frames, so we see that also in bigger time horizon, if we go back where it has started, for example, we just trade, let's very simple with daily EMA. We see, for example, we can see here, okay, the market has to get back below the EMA to make a retracement, and then we will sell the market structure, right? For example, at this area, we had a good possibility at 40,992 that the market, you could have the possibility to sell the market, to let it run, right? And then it depends then on your own trading mentality. Once you want to have some profit takings, or you say, okay, then we sell, we liquidate then all the positions if the trend would change, right? If you are on technical analysis side. If you are on technical analysis side, but make it dependent on what the macros are, that's much more better, because you have very strong forces and energies in behind of you that are driving the market for longer time. So your technical analysis will be then just your timing indicator, right? In this case, for example, I'm taking the technical analysis as timing, right? And if the market is running, it does not run in my favorite position, what is more to the south, then we say we avoid to buy the market when it's coming up. At certain key levels, we sell the market as long as the fundamentals are bearish, and on technical analysis side, also the trend is bearish, right? And now looking back of today's move at this megaphone that the market made a new low, but also a new high now. And you see at the beginning of this video, it was something around 13,320, 13,300, right? And now where is the price now? Look, the price is at 14,270 again, 50 points down, right? So everybody is now looking for the market to get higher, but we have structure of the market, meaning that the market will try to reach back to around 14,100, 170, something like that. And then they start to get up to in the near of 14,270. That makes again the bulls happy, and then the market will come back, right? So to around 14,230 to 14,250, like that. All right. For a day trader, he can say, for example, okay, each time the market is then high, then I will sell, and each time the market comes down, I will buy, and I do it twice and make a lot of money, right, every day. So, but it's not going to work that way, because sometimes, and we have seen it here, right? Everybody was thinking the same. What happened? The market broke the very important levels. broke the lows, and made a new low, 14,500, 14,055. 14,055. I write it here. So 14,055. Right. Now, if you look at this number, how many points is the market far away from the beginning of 13,000 zone? And this is the question you need to answer yourself. What is the power of probability, right? So trading with the trend, now we can use this mechanism in our favor. Each time we detect this structure of the market, so what would be a good decision, for example? Where can we make them better, or where do we have better odds to make higher or better profits, right? Where we can limit our risk, but we can increase our potential of profits. So if you would ask me, I would say at the highest level, when the structure reaches the high, or the price reaches the high of that structure, meaning if the market is right, we are short, meaning then our favorite direction is if the market goes down and down and deeper, right? In the bullish trend, the same, right? We are always very happy if the market is running higher and higher to the sky, to the moon, to Jupiter, whatever. So, but now the current state of the market, the global, macro, and also technically seen, is bearish, is downwards, right? From up to down. So, downside. Meaning each time I see this pattern, I wait, and then I wait for a confirmation. For example, now I didn't, I have sold here, but normally better it will be to see if it tries to make also higher highs. So the better is that it comes for me, for example, to 14,367. Much more better, I will appreciate it also if the market runs so high possible to around 14,500, 14,600 again, right? And even so, some say, but you should have taken your profits here. Yes, of course, but I'm not going to do that because I'm convinced the market will go deeper. So, and therefore, I'm waiting that the market is coming to those regions because I'm stick to my setups, right? Today, the market is not confirming my patterns. The market is not giving me what I expect, right? And therefore, my power is to control. The market is not controlling me, but I am controlling my emotions, and I am controlling my temptations to get into this trap, right? If I start selling here, for example, and we see now our RSI, all right, let's make it a little bit much more interesting. We see here the market made a low, what RSI made to, right? So the market is making typically low, high, low, lows. The RSI followed. So far, so good. Then the market makes higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, until here, somewhere around here. And then the RSI follows until that point. So far, so good. Then we see, okay, it's not a good time to sell, right? Then the market makes the next higher high and higher lows. Now the RSI is making a lower low and no more higher highs. The market runs even higher, the price, to 14,321.6 at 11:30. I think so, yes, 11:20. What does the RSI do? The RSI is not making a higher high. What does it mean to me? It just means that we have now a divergence, a local divergence. And now I want to test a zone divergence. And if we go back, I'm going back and see, okay, the next highest high of the RSI was here at October the 27th, today at 8:30. What was the bar price? The bar price was at 14,231. All right, it happened already this morning, right? So around 2 hours or 3 hours before. And here was the period where the news have been released. So what did I tell you? The first move after the news has been released, it doesn't matter to which side, is always algos. Solution, if we are trading, day trading, or we are trend traders, it doesn't matter. And there are only two types of traders. So day traders or trend traders. So support resistance is also day traders, right? You cannot say, for example, I buy the support for a week and then I sell it after a week, right? It's not working that way. So that way, by interpretation of trader types, whatever, it doesn't matter. We can call it what we want. But we see here, as we had a low price, the RSI already did the highest value possible. And even after the news have been released, the RSI never made a higher highs. You see here again, look yourself. The RSI reached here the value of 71.07, right? And the next spikes are always deeper and deeper, very deep. Even here, the market is making a new higher high. And the RSI is not able of making a higher high. So we knew today we will have a very, very choppy day of divergences. And then we got the confirmation. Russell, instead of being bullish, is bearish. The dollar, very good news for dollar. The dollar should be bullish, but dollar is bearish, right? So only NASDAQ and only ES are bullish, and the value of S&P 500 was at around, I think, 0.69 or 0.7, is now 0.09, right? Only NASDAQ is running in this moment. So, or was running, what is now consolidating, right? Then Euro have been in negative territory, but now bullish, right? So, and the bonds playing the same. What does that mean now if I will start day trading? Well, my decision would be I do nothing. Why should I invest my and waste my time and energy in something what will not run, and I know it will not run. How can I see that? Just with the indicators, right? And the news came out, all right, very well for the dollar. The dollar is not reacting to that. No, NASDAQ is reacting to that. And it can also happen that the market maybe in 2-3 hours runs higher, let's say 14,300, 14,400. I love it. I appreciate that. I am bearish. Please, bulls, please, I beg you, drive the price higher, please, because then I want to sell you more. I like you for that. Please do that. But they don't do that. They won't do that, right? So these are the levels. And that means the market is waiting for something more. And now if we look ahead, we see here Sunday, the techs are insider buying again. Yesterday, have you seen yesterday's scores? Amazon was, I think, minus 3%, now 8%, right? So, and Tesla, right? We had 2 days this week where Tesla hit also minus, I think, 13 or 14%, then minus 9, and then coming back now to around 2%. What does this number mean? Today, for example, Tesla is plus 2.23%, right? Let me now illustrate it. So, with the last 3 days, right? Let's say here was the day one, okay? Then we don't care if the price came from here or for here. It doesn't matter. So then Tesla fell 9%, right? A short correction at the beginning, and then Tesla made minus 12% again, all right? And now on the third day, Tesla is making 2%. All right. Now I ask you, is that trend down or is that trend up? Just see yourself. So these prices matter only for the day we are trading, right? Today, so you can, for example, the chart of the stocks and also NASDAQ itself. So everybody is happy. Today, look, NASDAQ is going up. Have you seen? I have told you, I am the best trader of the world. 1.18%, right? But we have lost yesterday around 2.2%. So again, minus 2.2%. Today, let's see here, 1.19. The day before, so I remember we had around 0.57, and then the day before we have been here. So, and then the day before, the bulls have been here. They had here enormous power to push up the market. And the day before, the market was so high, but it has lost. And you see only this part of the market. Okay, are very happy. So this is the bottom. But the same people told you too, this is the bottom. And here, this is also the bottom. And also higher, it was also the bottom. And now the price is near of 13,000 something. All right. So therefore, look at your trading system. And if you are making day trading, so please work always with stops and work always with wisdom, and also patience. It can cost you a lot of money, a lot of money. So, and as you can see here, a trader can also stay out. Why? Because the market tells you, dude, what are you doing here? Go to your girlfriend, go to your friend, go eat something, go playing something, do something else. Go away today. Sorry, we don't have to give you something what you want. And the market is telling you all the time. There's a communication with the price, with the indicators, right? So therefore, it's sometimes intelligent to stay away, to do nothing, to forget everything about trading. You know, life has a lot of things, more interesting things to offer. So don't rush, don't get frustrated, don't stress yourself, right? Patience is good because patience and discipline, this is also a kind of discipline every trader needs. And no trading is also trading. Today is not a good day. I'm sorry. So it's not my fault. It's not your fault. The market is not moving because we have a lot of mixed data. It's not giving us today. That's what we need, right? Even the price might go slightly higher or falls down. Then you say, okay, but you said do nothing now. Look, the market is 100 points away. I could take that. Yes, you can do it too. You can sell here and expect the market is going down. You can buy here and expect the market is going higher or here, right? Nobody is telling you because as a trader, you should be able to take your free decisions. We all have free will, right? And you taking your decision, therefore you are doing this business. This is the best business of the world, but also very risky business, right? If you are not doing your homeworks, then you will lose money. As simple as it is. And if you lose money, somebody else make the winners and they win your money. That's the business. It's not about suffering, it's about your own attitude as a trader. You want to become or improve yourself, and everybody, we all are improving. We need to be open-minded, right? So now someone will tell me, I tell you, the market can be, look, Dave Brasco, if you would listen to me and you would buy here now, you would have made this amount of profit. And I say, dude, you're absolutely right. Absolutely. But it's not the way I am trading. I am not a day trader. I avoid day trading. When I sell today, that's because possibly the setups, my setups are exactly there where I want them to have. The price has reached my setups, and then I press sell or the red button, and then I sell the market or I buy the market, whatever my system is telling me. But today, I'm sorry, my system is telling me do nothing. But you're also right because you are a day trader who is buying the bottom and selling the highs, or vice versa. There are also day traders who are buying the highs, right? For example, until now, if you would have buying the highs, maybe you will be in trouble because the market is gained back. So, and we see now 14,270, something like that, right? But possibly you have some more information that means that the market, that information will be released later, or you know something we don't know, and therefore, from your point of view, the price of today even it's here and higher than this limit or this amount, will be cheap enough because maybe next week the market will be here. Who knows? Everything is changing, right? So, whatever kind of trading system you have, there is no one who can tell you, I am absolutely right, I am absolutely wrong, right? Because we all have different kinds of trading systems. There are people who just buy the news, whatever news there are. It doesn't matter if the news are negative or positive. Release, they press buy, and then 4 seconds later they get out. Always, all the time. And of course, some ways they have also good winners and also losers, right? So, and today, so for me personally, there's no trading about next week. Monday we will have no news. On Tuesday only, the 31st of October, we will have very important data, manufacturing, and most importantly, FOMC meeting next Wednesday in 5 days. That's the most important day. So currently the number of traders are mixed now. Some expecting rate hike, some expecting no rate hike, whatever happens. The problem is that now some are expecting December rate hikes. So we have different strategies now. It can happen that even if FOMC is announcing no rate hike, the market falls deeper. Why? Because the market does not trade the news, what are happening, but the market is trading the future expectations, the events that are 2 months away from now, the events that are 1 or maybe 2 years away from now, right? At the end of 2024, Fed will start to cut the rates, then the market starts to react now, right? Therefore, you will have always sometimes very positive news. Like today, I said, very good news for the dollar, but dollar is going back. So, because the people buy and sell something if you are trading, because their expectations is in the future. They just buy and sell now, but their intention, their motivation why they are selling or buying the price lies in the future, right? So try somewhere to think about it. Maybe it can help you. So what as I told you today, no price for me, so I stay out, right? So I don't know what you are doing. If you have been trading for now, I hope you are very lucky and made also good profits. I wish you. So otherwise, we talk then the next week, and God